This episode is brought to you by Jason Burns of Guild Mortgage, ready for your next move. And by HomeMattersSC.com, building on what matters in the relationships.
Hey guys, today I have with me Jason Burns from Guild Mortgage, and thank you for being here.
Thanks, Angela, for having me. Guild Mortgage, we've been around since 1960. We do offer all the programs, and when I say all programs, I'm talking about USDA, VA, conventional, FHA, and you, of course, know we also do well with manufactured homes.
Yes.
Anybody's looking for that.
Yes. So tell me, what are the rates today?
Well, that's a good conversation. I'd say there's some conventional somewhere a little bit above 7.5, about 7.6. Those do fluctuate day to day. FHA and VA are more around 7 1/8, 7 1/4, and they do have a little bit lower rates right now. Usually the government products are a little bit more competitive, and that's just because conventional is private investors, and
sure,
they want a little bit more to do those loans right nowadays.
Yeah. I mean, that's really, I think we've said this before, not too far off from, the 30-year national average, which was around 7. So it is high compared to what we call the unicorn years.
Absolutely.
Which we don't need to be back in. I know that was great for people who bought at that time, but we don't need to be back there. Terrible for our economy. But anyway, yeah.
No, and to your point about, the 7% not being high, I think that it's like anybody getting used to something that, since 2008 or 9, rates have been in the 3s. And there's reasons for that. We had the crash of an economy. We had the pandemic happen. So you've got two big events that happened that kept those rates really in the 3s and 4s. So I was talking to somebody the other day that has a child that's 18 or that's 30 years old. And they have never seen rates in the 5s or 6s, or even, we're talking about rates in the 7s now.
Right.
Well, that is normal to people that have been in the market for a long time.
Right.
And, it's still a great time to buy if you're looking to get into a house. I mean, South Carolina, of course, is a great place to live.
Yes.
The home
Especially
market here is
Lexington area.
Absolutely. And that
Lexington,
the housing market here is still strong. You'll see a lot of reports about home prices coming down and sales being down and so on and so forth. But you and I both know that there's usually a lot of reasons that the economy in the market stays pretty steady here.
Right. And those are national. Those are usually the numbers that you see Wall Street journals or on the news.
Absolutely.
Those are national averages, things that not necessarily apply. I mean, we are in that number, but I mean, every area is a little bit different. I mean, downtown Columbia is even different from
Absolutely.
Over here, the Lexington, what I call the Lake Murray area. So
well, and you're seeing a lot of niche markets where people are wondering, well, hey, there's a lot of open houses, but then there's also a lot of homes that are going really fast, and you sort of wondering why. Well, that's just one. You probably got the rates up a little bit, so that affects it. You're talking seasonality as well. When we go towards the end of the year, the holidays, it does slow a little bit. But like we keep going back to, it's still a great time to buy. And if you're selling a home, one of the ways to get your house sort of to the forefront is, if you're having issues with it being on the market a little bit, offer a seller credit. And that does usually help getting your house sold. It's an opportunity for the buyer really to either buy down the rate or to have help with the closing costs. It's nice for the seller to say, hey, I'll help you get to the closing table. And sometimes that does make a difference in this market.
Yeah, so that's a good point. Somebody whose house maybe has been sitting there, or somebody who's putting theirs on the market and they really need to sell, and they need to make
Absolutely.
sure they sell quick. I mean, do it up front, have it in the contract.
It positions yourself differently, and
Right.
especially in this day and age where there's a lot of builders out there offering a lot of incentives for you to be, competitive with them, next to them. That's a good way to really position yourself.
Right. Good point.
Yeah.
Now at Guild, I know you guys have lots of programs, which we're going to go into another time. But you guys, have your own programs as well as, like you said, some of the VA, the FHA.
Yeah, right now, one of the ones that we just released is actually a HE loan program. So it's for people that are sort of need a bridge in between but don't want to refinance. We talked about those rates being 3%. It's one that we just came out with. Of course, get a hold of me if you guys want more information on that. We also do, just a couple other things we offer is a 1% conventional, and then also a zero down FHA, which is a secondary loan that covers that 3.5% of the down payment. There are a lot of things that go into that. So of course, like I said, reach out to me if you want more information. But
absolutely.
Thank you.
Yeah. All right, guys. Well, thanks so much for watching us today. And we'll be back to talk with Jason some more about some of the programs in more detail. But again, get in touch with him if you need to get a mortgage loan.
Yeah, and get in touch with Angela if you need to buy or sell a home, of
That's
course.
right.
Thank you so much for having me.
Yeah, thanks.
This episode is brought to you by Jason Burns of Guild Mortgage, ready for your next move. And by HomeMattersSC.com, building on what matters and on relationships.